Welcome to TMS Insights. Ben Clark and Jeremy Hook bringing you this update in February, which means it's reporting season and we get pretty busy going through all the company reports. Over the last couple of months, it's been a good run into the end of the calendar year, with November and December being good months for the market. A little bit of a pullback in January, and all systems go with some big news. Now, we were wondering as we head into the end of the year about Donald Trump, Ben, and how much impact he was going to have on the market. He's been inaugurated. He's now the president. There's been a number of announcements already, but the markets are basically still quite positive, and I guess predominantly still waiting for the big announcement economically about potential tax rate.
Yeah, I mean, he tweeted late last week that this tax plan was going to be phenomenal and no one was going to be able to believe it, and it's going to be released in the next fortnight. So, we saw Nicholas Moore, when he gave his update to the market at Macquarie Bank, he said this could be a meaningful thing for Macquarie Bank, and it would be for a lot of other companies as well. But I think everyone's sort of wary, and there's a bit of a grain of salt about how much of this is actually going to happen. So I think the challenge for us and for investors is there's a lot being talked up in terms of what he's planning on doing, but how much will actually become reality, and when will it become reality? But the market at the moment is taking the glass half full sort of side of it, and certainly the US market set another all-time high last night, and we've seen somewhat of a return of confidence, but probably a bit more muted here, it feels like.
Yeah, that's right. And the US's own reporting season was okay. Ours has started quite well. We're just seeing the numbers coming through. There's been quite a few results this morning, and there's a wave coming. But we wanted to go through a couple of the ones that have already happened. But one important one that came out last Friday was REA Group, Ben.
Yep.
Good result.
Yeah, good result given the environment that they're operating in. I mean, there's no getting away from the fact that the company doesn't release the data because they say it's commercially sensitive, but in Sydney and Melbourne, the real estate agents are saying that listing volumes are around 30% below where they historically have been. And in that environment, for REA to have grown its revenue by 16% and its EBITDA by 13%, given what's happening there, that's pretty phenomenal, really, you'd say. And the thing we await with this business is listing volumes to recover to more normal levels. And when it does, profits will skyrocket because they push through price increases. The debt's going well, the international division's going well. There's one factor outside of their control, and that's hurting them at the moment, but it will turn at some stage.
That's just the market they're in. ResMed reported very well, and again continues a good run. The stock's been strong, so it probably needed to report well, and it certainly has. Yeah,
look, I thought this was pretty exciting number. The 17% revenue growth for the last quarter was one of the strongest quarters in the last few years, but the thing that really stood out to me is ResMed spent about $600 million buying a company called Brightree a year or two ago. And we've actually seen some independent consultants saying that sleep has now overtaken pacemakers as the fastest remotely monitored devices in the market. It's currently about 3.5 million devices are monitored each year, and that's estimated could rise to 50 million by 2021. And ResMed's Brightree business is the leader in this field. So potentially this is a company that's sort of changing its spot somewhat and might become more of a tech stock than a sleep stock. But we have to see them execute on that, and it's still early days. But the core business is doing really well. Yeah,
encouraging in a market which does have some competitive influences, and they're leading the pack there, which is great. A stock which isn't leading the pack, we haven't been positive on for a long time, is AMP. Just another set of rubbery numbers there, Ben.
Shocking result, and we won't spend too much time on this one, but I think the insurance division was the culprit this time. There's always one culprit. It's one of banking.
Something wrong consistently.
Yeah, that's right.
So it's funds management one year, it's insurance the next, but
banking the next.
Every reason why we don't want to own the stock. So we'll move on from that to talk about a stock that was part of the AMP group, much better business really, the fund manager Henderson, which had been through a tricky year with Brexit, changes at the management level, and again the merger, which has been so much discussed by the market. Reasonable numbers though from Henderson.
Yeah, I thought so. I think this is a business that, as you said, it's had a tough year, but still is growing despite that, and pulling off one of the biggest mergers with Janus Group in America, which I think will offer a lot of benefits. And we saw the CEO in the market picking up a lot of shares yesterday for himself, which is always a good sign. So, I think a good long-term growth, and certainly not a premium multiple for a funds management business at the moment. But I think we'll see that one have a reasonable year this year.
Now, one that reported just this morning, and the call's a bit later, Challenger. I remember thinking at the August reporting season, this was one of the more impressive results and the more impressive management teams that I saw.
Yep.
Today's numbers were good.
Yep. Look, we've got the call in an hour or so we haven't spoken to the company yet, but the numbers again look very solid. And again, there's a lot of green shoots coming through this business. They're announcing new alliances to provide annuity platforms. The annuity market is in long-term sort of structural growth, we think. Sort of high single-digit earnings growth. It's not the fastest growing business in the world, but it's also not priced for that. And a good balance sheet, but a really impressive CEO, I think.
Yeah,
and,
just Brian Benari,
yep.
And a team around him, which is every bit as important, I think, too. Other results, Amcor,
yep.
well received in the market. Ansell, not so well.
Yep.
Any of those sort of industrial companies that appeal to you?
Look, I think Amcor's sort of talking up some of the structural changes in terms of, their bottles division. I think that's still a good long-term growth stock. And Ansell, the highlight this year was the sexual wellness division, which has been a drag, and they're selling, so they could get a pretty good price for that. But that's actually one company that will, I think, be a beneficiary if Trump follows through with what he's doing. The US industrial business has really dragged for quite a period of time now, and they sort of said that could really bounce back if that the manufacturing sector over there gets some life back into it. So. Yeah. I think the market sort of took the glass half full approach. The result was a bit softer.
Let's talk about CSL.
Yep.
CSL, obviously a behemoth, had a good upgrade in January.
Yeah.
Which saw the stock, which had been a bit softer, really kick up there. So, again, let's talk about it.
Well, look, that report's on Wednesday, but the earnings upgrade was great, but it was the size of the upgrade I was surprised at. They were guiding for 11% earnings growth this year. They increased it to 18 to 20% earnings growth. And, this is a company that just keeps on giving, isn't it? It's now trading close to an all-time high yet again. And on my numbers, it still looks fairly valued, and fairly valued, but in a period where they're achieving stronger growth than they have over the long term. So
and that's part of their history, isn't it? Periods where their earnings flatten out for 1 or 2 years, and then they really move up. And the share price almost gives you that chance sometimes.
Absolutely. I mean, this was trading. Well, we saw an enormous sell-off right across the healthcare sector at the end of last year. CSL got down to $92. It's now back at $115. So that's a $23 move, or 25% move in a couple of months. So. You do get opportunities to buy. I don't think you need to chase it at these sort of levels, but we've got a lot of CSL, and we'll wait and see what the detail is and the outlook when they report the result.
Also reporting tomorrow is Commonwealth Bank, a much awaited report. Again, it's the only major bank that reports in this period. We did have Bendigo the other day, which I guess didn't necessarily excite everybody, but
no.
CommBank, what are you expecting there?
I think it's going to be pretty flat, and I don't think you'll look at the numbers and get to see what's exciting about it. But I think it's more the second half of this year will be much better, and that's because they were able to pass through interest rate rises at the end of last year, which won't flow through to the numbers to this year. And I think we both agree the economy is still in a good space at the moment. People paying back their mortgages. Credit defaults are low, and margins seem to be improving. So
I think that's right. The numbers will be solid. The outlook okay. We'll be listing very much the commentary and some of the detail in that result about what they're doing with their mortgage book, how their corporate arm's performing, and where they see the overall business going forward. Other news today: Wesfarmers' new CEO. That's exciting.
That is. Richard Goyder's been there 12 years. Wesfarmers was once upon a time our largest holding coming out of the GFC, and he's guided that business very well. And I guess it probably means that any deals are off the horizon for now. There's been this long rumour that Wesfarmers has been looking at AMP, but that's not going to happen as he passes over. But from all accounts, a safe pair of hands, and been there for a long time. So. I'm sure the business will go well going forward. And we'll wind up now for the reporting season. We've got another one coming later in February. Look forward to bringing you that then.